TFCA, or tax-free car allowance, sometimes also you might hear accountable car allowance, is associated with something called IRS Publication 463. And really what that means is it's an alternative method for reimbursing that allows companies to offer simple flat allowances to drivers without the compliance regulations that are sometimes associated with more robust, flexible alternatives like favor. So we mentioned 5,000 miles being one of them, right? 5,000 miles minimum. It's also up to be able rather to be up to 100% tax-free relative to employees' captured mileage. So they could actually get 100% tax-free reimbursements in this model. So in this scenario, I could pay my drivers anything I want. I could give them, $10,000 flat for the year. I don't recommend that, but sure, you could, right? I could pay them $500 per month in a flat car allowance. I could even use fixed and variable rates. I could use favor market reimbursement rates. I could do whatever I want. The difference is that they're measured for tax against the IRS standard rate. What does that mean? Well, I calculate their mileage and I multiply that times the IRS standard rate. So we know that's 67 cents per mile this year. And then all I do is I compare it to what they actually took home under their car allowance. So did they take home more under their car allowance today than they would have taken home if I simply calculated their mileage times the IRS standard rate? If so, only the difference is considered taxable income. It is that simple. So if I pay them more than they should have got, difference is taxed. If less, no tax. So you're lowering your tax burden in a very simple way. This is a great option for those looking to lock a rate across a department or a driver group. So you want everybody to get the same amount, for example. Pros and cons to that, of course, which we've discussed, but it's possible. But it does leave some room for things like unfairness and tax burden or tax exposure that favor may not. And of course, favor is the only scenario in which you can actually pay over the IRS standard rate or its equivalent without seeing a tax burden. So it does make it the most inflation proof while also making sure you're paying fair for every single person.